All right. We did get the CPI data today and it was right in line with expectations. And right now the market is trying to churn around within this range. And we did fully hit that price target at the gap close right around SPY 540. So we can delete that gap fill and we can delete that projection. And now that we've hit the price target, it is now going to be a question of whether or not this is still a bull market or if we are going into a deeper downtrend. And if you listen to the things I tell you today, I am going to make this market extremely easy for you to understand because this market is extremely to understand right now, and it is all going to depend on whether or not SPY can break through this resistance zone and confirm we're going back into a bull market that is likely going to another brand new all-time high, or if this is a counter trend rally within a bear trend about to form another lower high that is about to get a rejection from resistance and continue into a downtrend that could take us all the way down to that 200 daily moving average. Now that does look extremely scary, but keep in mind, anytime somebody draws something on a chart, and there will be a ton of people that are drawing these arrows to the downside, you have to remember that nobody knows where the stock market is going. Nobody knows if the top is in. Nobody knows if the bottom is in. All we can do as traders is manage risk and play probabilities. And the probability of this occurring right here is by far the least probability of any other trade you can possibly make, but it is also extremely low risk. So when you get a very low risk trade, typically speaking, it is not going to be very high probability because somebody has to take the other side of that trade, and that means they are taking on the risk. And if they are taking a very high probability trade, that means they very likely do not have a lot of reward. So there will be bears that take this trade because it is so low risk to do so. All they need to do is manage risk around the resistance between 546 and about 549. And knowing if we break above that, the bear scenario is very unlikely, and then you would take that very small loss. But if you are correct and you short from this resistance, and we do go down for that 200 daily moving average, that is extremely high reward for the very little risk. So only you can decide of whether or not you want to take that low probability trade because it is likely going to lose. But if it wins, it's going to win big. But more than likely what's going to happen is the bulls will make a stand. Maybe we get a little bit of a pullback to retest the breakout back above the 20 daily moving average. And then we will likely make a very sharp thrust higher to break through that resistance. And that is going to clean all of the bears out of the market if we get that price action. And I say if we get that price action because that is only one of two scenarios. We are either about to explode through resistance and go higher towards the 560s and 570s, or we are about to get rejected and start down for another nasty downturn, or at least another pullback to fill this gap at 535. So to put this the most simplest way possible, SPY at 544 is the critical risk. Above 544, things are looking a hell of a lot more bullish, or just stay bullish above 538 and get risk off below it. But above 544, the bears will be on borrowed time as the bulls continue to push higher and make this market look a lot more bullish. So 544 is a very critical resistance and 538 is a very critical support. I am personally viewing this as a trading range between 538 and 544, meaning I don't have any care in the world if we go higher or lower. I am a trader. I could not care less if the market breaks to the upside or the downside because I am fully prepared to trade it in either direction. So I do not care which direction it goes because I am fully equipped to trade it up or down. That is the benefit of being a trader, is we could not care less if it goes up or down. We simply just want to be on the right side of the move. And the right side of the move will be bearish below 538 and bullish above 544. So I really do not think it needs to get any more complicated than that. Keep it just that simple. Let the price tell you above 544 it's bullish or below 538 it's bearish. And then if we can't break above 544 or down below 538, that means we're neutral and we're stuck within a range. And anytime you're stuck in a range, you're better off just shorting near resistance or selling or buying down near support or covering your shorts and just continue to trade that range while we're in it. So 538 to 544 does not get any simpler. Have a plan prepared for either of them, then let the price action do all the talking. And whether you're going long or short, please manage risk around these critical levels. On the NASDAQ 100 triple Qs, we are currently sitting right at the resistance. We did hit the price target, which I gave you right around 457, and I can delete that arrow now and start cleaning up this chart a little bit. And on the triple Qs, I'm going to also keep it very simple for you. We are only starting to get a lot more bullish if we can break back above 464, which is also that 50 daily EMA. The critical support I want you to pay attention to is right around 457. So treat it as a trading range between 457 and 464. Above 464, we're getting the bull breakout likely going to 480. And if we get the bear breakdown below 457, then we're getting risk off immediately. We have a gap to fill right around 454 and a support right around 446. So below 457, risk off. Above 464, risk on. Neutral within the trading range between 457 and 464 until we get a breakout to the bullish direction or the bearish direction. We couldn't care less up or down. We're traders. We simply want to let price tell us which one it is and then trade it accordingly. And then very quickly, we'll look at the VIX, which is still crushing from that extreme high that we had Monday morning. And this is the main reason I'm telling you, be optimistic that Monday morning could have been a bottom within a bull market, because VIX that high typically does mark bottoms, and it's been crushing ever since. And there's a good chance with OPEX coming up on Friday that the VIX will continue to crush. Those market makers sold a ton of puts for very high premiums, and the lower they crush this VIX, the more money they're going to make by Friday. So do not be surprised if that alone is good enough reason to make this market bullish. The VIX will likely go lower towards 13, and there's not much you can do to stop it, except maybe a black swan event, which I severely doubt we're going to get one. So the VIX will likely continue to crush into Friday, likely going down towards 15 and 13, and that is going to help the bulls push through that resistance, and that will be confirmed with the price action I talked about on SPY and the NASDAQ 100. So just have a plan, be prepared, know the VIX is crushing from that high, which could have marked a bottom, so do not forget there is still the possibility that was a correction in a bull market and we're likely going higher. So jumping back over to the S&P 500, I don't think I could have made this any easier for you. These are the critical indices you should be watching. The VIX is crushing. We have a critical range we need to break above or below to tell us where we're going from here. The trade from the Monday low worked very well, and if you got those long entries, just be very patient because you may have caught a bottom to a market heading to another brand new all-time high. Manage risk along the way. If we break support, you can get risk off. If we break resistance, you can get risk on. Move like water and always manage that risk, and you will continue to crush this market. If you want to come crush this market with me, you can join my Stock Channel Discord server and get access to all of my trade ideas, my technical analysis, and my intraday updates. And there are a lot of really good trade ideas coming up here very soon with all of this volatility in the market. There is lots of opportunities, and now is a great time to be a Discord member. You can find out how to join the Stock Channel Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.